Hi there. If you are over age 60 working as a freelancer in the UK, you need to know it now.
If you're a freelancer over 60, listen up. There's a dangerous rumor going around about the 2026 tax changes, and falling for it could cost you big time. There's so much noise and confusion out there, but today we're going to give you the straight facts.
And just so you know where this is all coming from, this entire breakdown was developed by the expert tax advisors over at ProTax Accountant. They're one of the UK's most trusted accounting firms, so you can relax knowing you're getting a proper professional look at what's really going on.
All right, let's get right to the heart of it. The big question on everyone's mind. You're over 60, you've been doing this for years, maybe you're even thinking about taking it a bit easier. Surely HMRC isn't going to force you to learn a whole new digital system, right? Well, that's the trap, and it's a very expensive one to fall into.
Which brings us right to our first and possibly most important point. We have to bust this myth about an automatic exemption for people over 60. It just doesn't work the way people think it does.
This slide says it all, really. On the left, you've got the myth, this idea that your age is some kind of get-out-of-jail-free card for tax changes. But the reality, on the right, is completely different. When it comes to these new rules, HMRC doesn't care how old you are. They care about one thing, your business income.
So, what exactly is this new system that's causing all the fuss? It's called Making Tax Digital, or MTD for short. And from 2026, it is the new reality. It's totally replacing that old annual self-assessment tax return that we've all been doing for decades.
And let's be clear, this isn't some small change affecting a few people. This number here, well, did you know over 864,000 sole traders and landlords are being urged to get ready for this shift? If you're self-employed, the odds are this is aimed squarely at you.
Okay, let's make this simple because the dates are absolutely critical. The first group gets pulled in on the 6th of April 2026. But, and this is the part that catches so many people out, your deadline is decided by your income from the 2024 to 2025 tax year. If your qualifying income was over £50,000 that year, you are in from day one. Then, as you can see, the threshold drops to $30,000 in 2027 and down again in 2028.
So what on earth is qualifying income? This is crucial. It is not your profit. It's your total turnover, your gross income, before you take off a single penny for expenses. So let's say you're a consultant based in Manchester. You bill clients for £55,000. After you pay for software, travel, and all your other costs, your actual profit is only £15,000. Well, too bad. HMRC looks at the £55,000, and because that's over the threshold, you have to comply with MTD. The only bit of good news is that your pension, savings, and dividend income are not counted here.
And what does complying actually involve? Well, it means saying goodbye to that shoebox full of receipts you sort out every January. Under MTD, you have to keep all your business records digitally, using software that's approved by HMRC. Then you'll send them an update every 3 months with your income and expenses. And finally, you'll submit one end-of-year statement to wrap it all up. It's a huge shift towards real-time tax.
Right, I know what you're probably thinking now. Okay, so there's no automatic exemption, but are there any real exemptions? And the answer is yes, there are. But, and this is a big but, they are not a loophole for most people. The rules are unbelievably strict.
And this quote pretty much sums up HMRC's whole attitude. Let's put it bluntly, saying you just prefer paper, or you're not very good with computers, or you think the software is too expensive, those reasons are not going to fly. HMRC will almost certainly reject those kinds of claims.
So who could be exempt? Well, the main one is something called digital exclusion, but you have to apply for it, and you have to prove that it's genuinely not practical for you to use digital tools. This could be because of a disability, for religious reasons, or because you live somewhere so remote you can't get internet. There are also a few very niche and often temporary exemptions for people like foster carers, but honestly, for the vast majority of freelancers over 60, these just won't apply.
Okay, let's switch gears a little and talk about another thing that catches a lot of self-employed people out as they get near retirement: national insurance. The rules here are different than for regular employees, and it's a real sticking point. Specifically, we're talking about Class 4 national insurance, which is the type you pay on your business profits.
Now, this timeline is so important to understand for your financial planning. You see, if you're an employee, you stop paying national insurance on the very day you hit state pension age. But
not if you're self-employed. You have to keep paying Class 4 NI for the entire tax year in which you reach that age. So look at the example. Your state pension age is the 10th of November 2025. You still have to pay Class 4 NI on all your profits for that whole tax year, right up to April 2026. It only stops on the first day of the next tax year.
So, here's a pro tip for you. Before you get anywhere near your state pension age, do yourself a favor, go to the gov.uk website and check your national insurance record. You need 35 full years to get the full state pension. If you've got gaps, you can often make voluntary payments to fill them for the last 6 years. It's absolutely worth doing. Don't leave that pension money on the table.
Now, making tax digital is definitely the big one, but it's not the only change coming down the track. There are a few other things tucked away in the 2025 autumn budget that are going to start affecting us from 2026. And stay with me because you'll really want to hear this part. If you run your business as a limited company and pay yourself in dividends, this is for you. From April 2026, the tax you pay on those dividends is going up by 2%. This is a direct hit on small company directors who typically take a low salary and top up with dividends. That classic tax-efficient strategy is just, well, it's becoming less efficient. It means you'll be keeping less of your own company's profits. And this number, £312, well, that represents the flat-rate home working allowance of £6 a week. From April 2026, it's gone. Scrapped completely. That simple, no questions asked claim is disappearing. From then on, if you want to claim for working from home, you'll have to prove the actual extra costs you've incurred. That means more paperwork, more calculations, and for a lot of people, a much smaller tax deduction.
And finally, there's the stealth tax that gets everyone, fiscal drag. The government has frozen the personal allowance and the higher rate tax threshold all the way until 2031. Why does that matter? Well, as your income goes up just to keep pace with inflation, more and more of it gets pushed over those frozen thresholds and into a higher tax bracket. So even if your business isn't really growing in real terms, your tax bill is.
Okay, I know that was a lot of information to take in, but the most important thing is not to panic. The key is to prepare. So let's turn all of that into a straightforward, simple action plan that you can start on today.
Here are 4 things you need to do right now. Number 1, and this is the most urgent, go find your books for the 2024-25 tax year. What was your gross turnover? Was it over £50,000? Because that's the trigger. 2, just like we said, get online and check your national insurance record. 3, start looking at digital software now. Don't wait until the last minute. And 4, rework your budget. Figure out how these other tax changes are actually going to affect your take-home pay.
So, I guess the final question is this. When you look at all of it together, the move to digital, the new NI rules, the tax hikes, are you really, truly confident that you know how all this is going to affect your business and your retirement plans?
Now, before we finish up, just a very quick and important disclaimer. Please remember that all of this information has been for general guidance only. Tax law is incredibly complex, it's always subject to change, so you should always seek professional advice that's tailored to you before making any financial decisions.
And if you want that kind of expert, tailored guidance, you can get in touch with the team at Pro Tax Accountant. All their contact details are right there on the screen. They can help you navigate all of these changes and make sure you're ready for 2026.
Thanks so much for watching. I really hope this has helped clear a few things up for you. For more essential updates just like this one, make sure you subscribe to the Pro Tax Accountant channel. Stay informed and stay prepared.